Henrik Drusebjerg is a senior strategist at Nordea Bank, joins us now. Thank you very much for speaking to us. So what does the market want from today's meeting in Brussels?
I hope they at least expect some sort of conclusion to this, but I don't think the market is very optimistic about this. There's still a lot of problems surrounding this deal. For example, are the banks holding enough Greek bonds to actually make that haircut valuable enough for Greece? So I think they hope of some sort of progress, but I don't think they expect it to be finalized after today.
What are you hearing from clients? Are investors and companies trying to protect themselves from even a partial euro area breakup?
I think investors generally still are very careful, and so are we with our strategy. I think there's definitely an improvement around the US, China, as we heard previously, but still the political risk to Europe is very big. So far this year, the politicians have enjoyed the luxury of negotiating without being under acute pressure from financial markets. But the big question is, for how long will that state sort of keep on going? Are the financial markets keeping on to be patient with European politicians? I doubt that. Therefore, I see investors still being very cautious.
When are the markets going to lose some patience?
That's the $500 question. Nobody knows. It could be today if the European finance ministers don't get enough results, or it could be in a month or two. Nobody knows. But so far, the patience is there.
And Henrik, despite this, you've been much more risk-on since the start of this month.
Yeah, we've slightly dipped our toes into risk. We've done it on our bond strategy. We've taken more investment-grade bonds in. We've taken more high-yield in, and we've taken more government bonds from more high-yielding economies. And on the equity side, we've taken a bit more risk on our sector strategy, going downgrading stable consumption and going overweight energy.
Overweight energy, why is that? Because we are seeing oil now at a 9-month high, aren't we, on anticipation of geopolitical tension in the Middle East?
Exactly. I think there's two compelling arguments here. I think it's really that if we see a further improvement of the U.S. economy and we see China starting to stimulate their economy, oil demand will be increasing. Then we have the situation in the Middle East, and I think an overweight to an energy sector could be at least a momentarily hedge against an increased unrest in the Middle East. So I think it's a good way to take a bit more risk on without putting it all out there.
Does that mean that you like energy stocks as well?
Yes, definitely.
Are you still going defensive on U.S. equities? Because you do sound a little more positive on the U.S. in comparison to the rest of the developed world, and we have had positive reports on jobless claims, manufacturing, even housing recently. So are you moving into a bit more risk in the U.S.?
Yeah, we've been overweight on the U.S. for a couple of months now, and I think macro data is still confirming us that the U.S. economy is improving, and it's improving in a faster pace than anticipated. So we are putting more risk to U.S. equities, and we're putting more generally into U.S. equities. And again, when we look at the bond side, when we're going to investment-grade bonds, we're still preferring the U.S. because most of the European market on investment-grade is financials, and we would like to avoid Europe, and we'll especially like to avoid European financials right now.
Got it. Well, Henrik Drusebjerg, senior strategist at Nordea Bank, thank you.